Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. As the last official, or I should say last unofficial trading week of 2017 comes to a close, and the euro currency ended up in sort of a low volume fall, only down about 15 basis points, which would be 15/100ths of 1%. And a little bit of that slide coming off the Spanish vote, where Catalonian separatists actually won a majority, and the Catalonian president who would still be arrested if he went back into Spain. There's still a warrant out for his arrest. Kind of got vindicated a little bit, as he needs to now form a government, I guess, from absentia. He's not allowed in the country. So the Spanish prime minister is considered a big loss for him. He's going to have to work with the Catalonian separatists in some way, and this kind of hit the euro. It doesn't seem like this is going to explode. The sort of peaceful resolution that they've come to seems to be intact, at least for now, but it did hit the euro a little bit as the news came out. Now, the dollar has been flat. Really, the dollar can't seem to hold a bid, even though we had what's considered by many the largest tax cut, and what's called the Tax Cut and Jobs Act. It's yet to be seen if it creates any jobs, but the tax cut definitely is going through. And the market is telling you now that this is being seen more as another version of quantitative easing, as something that's going to promote growth and cause the Fed to come in and be more aggressive, because the dollar simply can't hold a bid. That's helping keep a little bit of strength to the euro. Even though the euro has been sort of in a downtrend this week, it looks like the euro is kind of coiling to rally against the dollar. And a lot of that has to do with the dollar not being able to hold up. If the dollar collapses precipitously, by default, the euro will rally. And that really looks from the charts like what is possibly going to happen. Now, we're going into a holiday week, a 2-week low liquidity period, holiday trade. That is actually sort of a ripe environment for this kind of thing to happen, where the lack of liquidity and these moves can be exaggerated. Now, most of the bigger desks, the bigger traders, won't look at these moves as real, but they still can make you or lose you real money. So you have to be careful in these holiday trade, especially in FX, because of the 24-hour nature of it and the volume of the 3 different sessions, London, New York, and Tokyo, that the trades come through at. So be careful in the holiday week. This is Bob Iaccino talking about a slightly lower euro from the CME Group trading floor in Chicago.